The show focused on delivering beneficial information on everything to do with products and services that can improve your life. This is Experts on Call on AM 650.
Welcome back. I'm Tony Giavento, your host of Quay Pacific's Talk About Strata. I have in the studio Gordon Lee from CMW Insurance and Albert Atfield from CanStar Restorations, and we're talking about our insurance disasters that we go through and restoration and the things that people need to deal with. We just finished off talking about a major project of construction and what happens when we go through a major fire or a major loss. But what happens, Gord, if we get into a situation where the building is so badly damaged it's not worth repairing? What happens if, what's your perspective as an insurer if the building loss is total?
The unit owner or the Strata Corporation will have the option to, of course, repair it, but if they don't, it's called actual cash settlement. And actual cash settlement is the definition of it. The formula is cost to replace minus depreciation.
Right.
So usually that value is going to be, of course, if it's a $9 million building, they're not going to get a check for $9 million. So depending on the age of the building, it will be depreciated, okay, and then a number will be offered to the Strata Corporation.
So which is an interesting situation, though, because that's where a recently published depreciation report would be used to help evaluate certain components of the building and age of buildings and systems as well, wouldn't it?
Yes, it would. That whole process is somewhat, from what I've, my experience, is a bit of a negotiation, settlement, because, I mean, how do you really put a number on what the value is? So you could argue there's a market value minus the land, and then you can argue, what's really depreciated based on the condition of the building. So I find that usually in those cases, you get through, it's kind of like an offer is made by the company, and the Strata Corporation or the unit owner or the building owner would make a, say, well, counter offer and say, I don't think that's valuable. Here's the reason why I think I should be getting a little bit more money on this cash settlement.
Yes. So it becomes a negotiating process. And of course, under the Act, Strata corporations, if they decide not to replace or repair, once they get a settlement they can agree upon, it's a 3/4 vote at a general meeting. So they may find that they're having a meeting to decide on an amount where each person's share is established and how the money is going to be distributed, and the Act sets out formulas for how those procedures take place. So it's kind of an interesting step. We haven't really had anyone in BC, thankfully, have to go through this yet, but it is a complicated situation that Stratas have to deal with. Cost, though, would have an impact on that. If we're in an older building that has quite a lot of asbestos in it, how's that going to impact it?
Well, the asbestos removal is a huge expense. We have to go into full containment and comply by all WCB rules. So it's a long, painstaking process to go through, depending on how much you're removing and the areas that you're removing it from. Now, if you're talking full building, there is many companies out there that do full building removal of asbestos containing removal. But that being said, they do it in components, so they break it out into, they remove this section of the building and these components out of the building. So everything's done in a certain, it's like peeling an onion, if you will. They start to take things out, and then once they get it down to just a raw frame, they can take away the rest of the frame.
But the costs climb, don't they?
Extremely.
Yeah.
They're I would say, off the top of my head, let's say at least 60% higher than if it was just a regular building.
So we're dealing with big costs. We're dealing with big deductibles, insurance deductibles. You have a homeowner policy. The homeowner has let their bathtub run, overflowed, forgot about it. We actually had this happen a few weeks ago. The lady actually went to work. And the bathtub was running in the unit, flooded out a number of units below. The insurance deductible is $25,000. So restoration takes place. They will have construction on site, which will be, it'll take some time for restoration. The $25,000 though, that homeowner, can they actually buy insurance as a homeowner now to cover a deductible that's $25,000, $50,000, or $100,000?
I would say right now, $25,000 deductibles is somewhat manageable, but not guaranteed. So, if I would say to any unit owner of a condominium, make sure, know what your deductible is. If it's on a higher limit, you should really go to make sure either on your policy wording or call the broker to confirm. Because a lot of companies now, over these last few years, probably last 5-6 years, where deductibles increase, a lot of companies actually cut down on that deductible. They're either that limit, or they've made it as an option. Some won't do it. Some will just say, 10,000 is the maximum limit. Some will say, 25,000 is the limit. Some will say, if you want the higher limit, you have to pay for the extra premium. If you start getting above 25,000, I would say for sure you really need to get 100% confirmation, because there's very few companies offering deductibles over 25,000 in the marketplace right now.
So I'm a homeowner. What I need to do is I need to make sure that I keep a copy of that report on insurance that the Strata gives me at the AGM every year. Go to my homeowner insurer, talk to my broker, and make sure that I'm covered for those kind of risks and liabilities that are not covered under that policy for my protection.
Yeah, those things are so important these days that, that's the big change in strata living from an insurance point of view. It used to be just, contents, and people would come in and say, I want contents insurance because I got a nice bike, a $5,000 mountain bike plus some laptop computers and some nice content, so I want it insured. Where now really the topic should be, what is your deductible if it's going to be $10,000, $25,000 that you need coverage for? And those policies are quite nice. To go through that with your broker, you could actually get coverage for even earthquake deductible portion, which in the event of an earthquake, Tony, if it's a 10% deductible on a $10 million building, it's $1 million deductible, and that's going to be assessed back to the unit owner. And I'm sure most of us don't have that cash in our pocket, and we don't want to spend it if we do. So get that insurance covered.
Issue. Yeah, and we didn't even open the door on earthquake today and earthquake insurance, because we have a future show that's dealing with emergency planning and earthquakes. But that's an overwhelming expense that most people don't actually contemplate, and that's one of the issues we deal with. Albert Hatfield from CanStar Restorations, thank you for coming. Very much appreciated. Gordon Lee from CMW Insurance. Excellent to have you both on the show. I'm Tony Giovento, your host. If you would like to email us, if you'd like more information, questions@talkaboutstrata.com. If you'd like more information about insurance policies, go to the CHOA website, choa.bc.ca, and happy strata living.